Time for our daily buzzword, one investment term to improve your alt vocabulary. Bob Rice of Tangent Capital Partners is here. And Bob, a very apt term based on our last guest, the founder of Shares Post and president, I might add, but private placements. And he and I'm sure you just heard, just discussing how the Jobs Act is going to affect his business. And this is a big piece of the puzzle.
Very big piece. So it's useful to kind of get reset on private placements in light of all of the changes that are going on. So originally private placements were, frankly, exactly what they sound like. Very discreet placements, sales of securities, almost always with institutional investors and by brokers who were making quiet little phone calls to just a handful of people with whom they had a very strong relationship. One of the hallmarks about these things historically was, therefore, that you couldn't have any general solicitation. There were no advertisements allowed for these kinds of placements. If you were going to go that way, then you would have to do a full-blown IPO with all of the trimmings.
With all the trimmings and all of the costs, which I guess is part of the aim of the Jobs Act, is to reduce those costs that smaller businesses might find as a setback. But what is changing now?
Well, one of the things that I think is really interesting to step back and think about is, there's so much focus on the law. But before we get to the legal changes, which are very meaningful, let's look at what really brought this about, which is our good old friend, the culprit in many cases of all sorts of changes, the internet itself. So people like Shares Post and Second Market, Axial Market, and other very forward-leaning organizations started to realize, hey, although you don't have to have a general solicitation to reach a lot of people on the internet, and if we do things cleverly, then we can have kind of a mass-marketed private placement. And it was this I'm sorry, go ahead.
No, I was just going to say, what about the legal changes that you were just referring to?
So the legal changes, of course, are very meaningful because now they've stripped away a lot of the requirements that constricted the knowledge flow about these kinds of securities and about these kinds of placements. And so specifically, on the way to changing the crowdfunding rules, to reach a crowd, to do crowdfunding, of course, you have to let people know that the security is there. So to do that, they basically repeal the core of the private placement question and suddenly now say, you know what? You can have general solicitation of a private placement. You can have advertising of private placements. And this is a total sea change in the industry.
So it's a total sea change, but Bob, doesn't it raise kind of a basic question? If a private placement is no longer private, then what does distinguish it from being a public offering?
Well, I think it's a pretty fair question, don't you? But
yes.
There actually is a meaningful distinction still, which is you can advertise it generally, but you can still only sell to accredited investors. Generally, that means people with $1 million, excluding the value of their home. So $1 million plus type people, and the SEC says, well, they're sophisticated, so they can buy it, but moms and pops can't buy it. So moms and pops may well see advertisements for hedge funds, but they won't be able to invest in the hedge funds.